The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, we go into the breach, dear friends.
The following takes place between 2 p.m. and 3 p.m.
So what do we have going on? We're off 25 points on the S&P cash. Oh, a little less than that, 24 and some. NASDAQ's off 60, Dow's off 265. We've been selling off pretty much after 12:30. It's been kind of a slide down and, of course, making new lows lower than the early part of the day. I said we needed to worry about a few things yesterday, especially the financials. I didn't put the turkey thing together. I did put the financial things together. I think we've got a fairly decent move. Options continue to show that the market could hit 2,800 for next Friday, which in the scheme of things, it's not all that big a deal. Volume, of course, on a Friday, never going to be huge. We're kind of, what's this here? Let me bring that back up. We're a little bit better than we were yesterday. I think we came on yesterday with 3.4 billion shares, 3.5 billion shares. The day before that, as we started the show, we're doing about 3.8 billion shares. So a little bit more than Wednesdays and Thursdays. So that shows that there's a few people trying to get out of Dodge before the weekend. I think we could see some more of that. Now, if options continue to drop, when I do the review tonight, actually I'll do it over the weekend, maybe there's some more downside, but generally what happens is everybody will start buying puts, everybody will start going short, and that really, if they do that, it does tend to bring up the, at least for expiration, the low watermark for next week. But right now I'm kind of looking around that at least a test of the 2,800 on the S&P cash. We were going to have maybe 3 dojis in a row. In the last 10 minutes, of course, everybody came, and we actually had selling Tuesday, Wednesday before the close. So at 3 o'clock, I added 3 new short positions in the newsletter. And, well, I think that's all we got to say about that, isn't it? It's just markets headed lower. We came up. We didn't have a lot of energy. A lot of these things were looking like they were rolling over. There wasn't a lot of people wanting to go to the mat. Now, I know a lot of people sure that the end of the world's coming. The end is nigh. I don't think so. I just think that, and thank God we didn't go out there and blow the high off if you're a bull, because now you have the opportunity to go retest that 2870, whatever it is, 9 level on the S&P cash. Since we didn't break that with a lighter volume, we can still get up there and do it. And again, that was like 12 billion shares, and we didn't even come close. I wasn't real worried about the market taking off and going higher. Sometimes when you get to those highs, it'll just, tick up a few points every day and drive the shorts nuts. But as I said, one of the things that always makes me nervous is when everybody else is euphoric. When the market was going higher, all I heard on CNBC, when I fast forward through the closed captions, I never really listened to many, if any, people on there. I do want to hear what they are telling other people because most of the time, 1, they're not traders, and 2, they'll be wrong. But just the people talking their own books and stuff like that. When the market was at 2,800 before, all they could tell everybody is how the market was going south right then to get out. When it was at the highs yesterday, bouncing around, all you could hear was about how it was going to 3,500 on the S&P cash. And it's not that hard just to do the opposite of what everybody on TV tells you. But it is, because they'll be right for the best part of it. But of course, then there's the one day when it all just flushes down the toilet and you're left with nothing. I've been through two of those so far, the dot-com bubble and the housing bubble. When I can remember there was a guy named Joe. I'm trying to remember, Battipaglia was his name. This guy went long right around 2000, told everybody the world was going to the highs. For the next 3 or 4 years, all he could tell everybody was to hold on. As soon as the market hit the lows down there and around 700 on the S&P cash, he was telling everybody to sell. It was going to 500. The guy just couldn't ever get it right, and he was just the same company all those years. So the only thing I can think of, he was being paid to go out there and tell everybody to do just the opposite of probably what the company was doing. But, you know, there's other people like that. There was a gal named Mary. I can't remember her last name. She was supposed to be a big to-do, and somebody made this beautiful chart of about 7 years where she came out and told everybody the market was going higher, and within a day or two, the market went decidedly lower. And at lows, she told everybody the market was going decidedly lower, and of course, within a couple of days, it went decidedly higher. Paid shills. Are these people, do they keep their jobs being literally that bad, or are they sent out there to lie to us? But I've got a pretty good read on what these guys say. And when they're all kind of giddy and talking about highs, I get real nervous. And when they're all talking about the end of the world, I get bullish. It's just one of those things where you kind of have to read between the lines. But who else could say anything but that? Anyway, as we look at the market, like I said, I'm not no end of the world here. I actually think things are going pretty well. We needed to have some kind of pullback. We certainly, if you were bullish, didn't want to go blow out those highs on light volume. So we'll continue to keep an eye on this. I think everything's going to bounce around, but probably not a whole lot of chance that this market recovers before the end of the day. We'd have to have some kind of news flash, and I think they took the tweeting button away from Mr. Musk, so we don't have to worry about him, I think, this week. But you know what? My guess is we're probably going to get a little more bad news this weekend from the Chinese. They're going to want to try to heap on. They're going to see the market went down a little bit. They're going to try to get a handful of us, or even more, a little nervous. Ooh, they're going to ramp up the propaganda. And there's many willing to just say, oh, just let them be. All I can think of is, you know what? I watched Dunkirk again last night, and I wish they would have spent a lot more time on the fact that he was right from about 1932, Churchill, and they were all wrong. There's a great book actually called Guilty Men that was written about 1940 about all these weasels that were cowards, wouldn't face up to the fact that, you know what, we're in a competitive world. They didn't want to see that Hitler was knocking at the door. Anyway, we'll be back after this and do a little bit of history, and we'll get out of here.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Are you in the market for selling or buying real estate in the Tampa Bay, St. Petersburg, or Clearwater area? Tiger Real Estate LLC is a firm that has extensive experience in this area. Whether you're looking for an idea of what your property is worth or how much per square foot you should be paying in these markets, we use our knowledge to get our clients a realistic price, whether buying or selling. We're aggressive, hardworking, and dedicated. Our reach and education include getting you information in the mortgage market as well as title insurance to ensure a smooth closing. Before you make one of the biggest decisions in your financial future, call Tiger Real Estate LLC at 727-329-8322.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Then it's all just a little bit of history repeating.
On this day in 1946, after a decade of debate about how to best to spin the bequest left to America from an obscure English scientist, President Polk signs the Smithsonian Institution Act into law, and that's why we have the Smithsonian. I would guess we kind of helped him out a little bit, and Mr. Smith decided to give us a bunch of cash. And that cash continued to grow and grow and make probably the premier museum in the world. If you've never been to the Science and Air Museum, it is something I could spend 2 or 3 or 4. I could spend a whole week there. That's it. I could spend the whole week there. Anyway, never knew, but he made a lot of money making zinc carbonates. Overturned public and popular scientific opinion. It was later named Smithsonianite. Can I say that? Smithsonite? Smithsonite? I never heard anybody actually call it that. That's why. On this day in 1946, though. So if you go in there ever once, go to Washington, D.C., and take a little pump there, drain the swamp a bit while you're there if you can. Every bucket helps on this day. 1846, excuse me. Okay. Question then, we got 2 good questions in there, so we'll go ahead and get to them. Any risk of a sharp SPX drop to 2600s, 2500s? Well, there's always a risk. One of the reasons I decided to pull the trigger was that options for next Friday all pretty much said definitively lower on most of the stocks that didn't have high short interest. And the next question goes, why does Russell keep bucking and fighting the trend? And that's because when we look at these stocks, and we'll talk about a few of them today, I mean, these things are massively shorted. If you go down, there's 10 people that want to cover. And that is the problem, is everybody's been shorting the living daylights. In fact, the new numbers are out on the Wall Street Journal's website. You can go in there and look at the highlights of stocks. But there's a ton of these kind of stocks that they never really talk much about, maybe once a week or once a month on the financial infotainment system. But these people are literally shorting around the block on these things. We've talked about stocks that literally would take, at the average last 30 days, 27 days to cover the short positions if the stock started going up. And that's why the big stocks do not. In fact, Apple, I thought it was one of the more interesting ones. Had almost 5.5 million shares covered in the last 2 weeks of the reporting period. So there's a lot of people out here that were short. When these stocks do, Apple's off like $1 and something. It was up to 209.5 yesterday. I continue to think that there will be pressure a lot on the SMHs too. That one's a lot cloudier to find out. We talked shortly about that, and I think that's going to be something that's probably going to be on the news burner on Monday. We'll know. But since everybody sends their chips out to be made at a fab these days, and that's not like fab in the Fab Four in the 1960s. We're talking about a fabrication place like Taiwan Semiconductor or Global. It's not Global. Global Semiconductor. It's something else. Man, it's been like 10 years since they've been public, and I keep forgetting their name now. But those guys, well, at least the Taiwan Semiconductor, got hacked, and they locked up all the computers in it. And if you've never been through a fab or understand the process for these things going on, these things have to be kind of set up, and it takes maybe a month from where you put something in one side till it comes out of the other. A lot of chips like Intel Pentium chips have almost 300 different processes before they go out the door. And certainly the Pentiums, I think, is almost 2 months. So you put one in one side of the building. If you can imagine just printing on the same piece of paper, and then maybe putting kind of a thin layer on it, and then printing yet again, and then printing again, and then washing it, and then printing it, and rinse, wash, repeat over and over and over again. That's how you build these chips. And, you know, it's pretty much all automated. And when everything stops, though, guess what? Maybe all those chips got ruined in the process. You got to stop them wherever they got ruined. Maybe you have to start all over. But the one guy bringing in a USB thumb drive basically crashed a bunch of those machines, and you can't find out from anybody whether they've started. They said that they would be back into production in a day, and nobody's written anything about them being back into production. I've searched around. So you might have a little problem. And of course, some people are saying that would, even some of Samsung's and almost all of Apple's chips that go in there come out of that fab. You could get a quarter miss because these things are not coming out on time. Just a bit of a delay is all that it would take to start doing that. So we may just have a confluence of events all coming together with trade disputes with China, other things. So is there a possibility of much lower out here? There is. I can't say that I can see anything other than at least we're probably going to, I'd say the 90% chance we're going to test 2,800 on the S&P cash. So what are we down? We're down 24, 28, 29. That's 30 points. You could do that in a day. I also wouldn't be surprised to see down at the depths of whatever this sell-off is, that we get that announcement halfway through the day when we're down 500 points and end up 1,000 points on the Dow or something, that we made some kind of deal with China. We were talking earlier in the den about the game theory behind China and the U.S.'s approach to dealing with them. It's hard for me. I know a lot of people dislike the current president. I suspect that that is clouding the better judgment of what is going on. And it's just the reason that if we lose 1 million people or losing 1 million people's jobs in the United States, that is basically about 5 million people in China. So if everything went to the wall, and let's say economists are thinking that if it went to the wall, maybe 5 million jobs could be put on leave or furlough. That would mean at least somewhere around 25 million to 100 million in China. Because when you don't turn on those assembly lines for iPhones, I mean, they bring in 250, 500,000 people into those towns to put those assembly line things on. Same as Samsung. Samsung's assembled in China. So could we have a pull down? You could. I don't know how anybody could predict it. So just play it day by day. I think the market's going to tell us. We'll be back in a minute.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're off 27.5 points on the S&P cash, 28 to 26.5. Russell's just flat. And everybody was, you had a good question out here. What is the end result of everybody shorting? Is normally this, they quit shorting, they cover. The stocks are artificially inflated because of it, and they all kind of have a big collective souffle fall. I kind of miss it. I know how horrible it was, but in the 70s TV shows like the Brady Bunch, it was always the someone came in and slammed the door and the souffle fell. That was high art of the time for writers back then. The proverbial souffle. Alice in the kitchen. I think she had like 3 or 4 of her souffles fell. But that's kind of the way it. When everybody gives up shorting, that's when the time you want to short. That's why I can't be short Tesla, because guess what? Every time it goes down, there's going to be a conga line. We're going to call it a conga line of people wanting to get in. You want to get short stocks when everybody's not doing it or they've all gotten off of it. So just a thought out there. But, Tesla, is it really down significantly today? The answer is no. You got a 20, 30% short interest in these things. One, you can get blown out with things like we've seen this week. But the other thing is, man, unless they're going bankrupt, there's a line of people to buy. And that's what you don't want when you want to be short. You want to make sure that there's a few natural buyers on the way back down as possible. So let's go ahead and, I did that one already. Let's do this. Let's start looking at some of the stocks that move and why. Again, almost all these had huge, OSTK, had huge short interest. Do I have this up now? Hang on, just give me a second here, and we'll get up this because I wanted to talk about it because we just got the bi-monthly data in. Overstock had earnings, 5 days to cover, a 45% short interest rate. You just got to have, you got to have blood on the highway. Those movies they used to show you in the in driver's ed. Blood on the Highway, Reefer Madness. Exploitation films, let's put it that way. Now, it got up to 48, gave back half of it. It's just the chances of you having a successful short on these are tough. And was the news that good? It wasn't. It's just that there's with 45%, what was that on the 30th? So we don't know what happened in the last 10 days, but my guess isn't that many people declined to quit shorting it. But it's not as bad as a lot of the other ones out here. Yeah, you've got 9.3 million shares short on Overstock. And if you want to hold it for 3 years, I think you're going to make a lot of money when it goes down to $5 or zero. But in the meantime, a lot of anguish. I would rather go after better low-hanging fruit. Another one out here with massive short interest in it. And again, these aren't the stocks that everybody talks about every day. I mean, they may talk about them during earnings and stuff like that, but they're pretty much forgotten. OLED. Nice. Earnings weren't that good. I'm thinking this company has a huge downside, and that is that Samsung's totally off OLEDs and going to the quantum dot technology. So the whole business of being in the OLED business may go away. But at the same time, this had 9 days to cover, almost 18% short interest, and almost 7 million shares short. All you got to do is not fumble the ball. This is kind of like the last 30 seconds of a football game where you're winning. All you got to do is not fumble the ball at earnings when you got that many shorts. In fact, Jim Chanos on Tuesday said that the best thing that Tesla had going for it were the shorts. If the shorts weren't around, my guess is the stock would be down south of 100, maybe $80. It's built its move higher on basically short squeezes. Okay. What else do we have? We have any more emails? Okay, AnBev, ABEV. Is this a possible Brazilian beer? You know what? If you got down to 4.58, that would be interesting, especially if the market starts really pulling back. These sin stocks tend to get everybody all hot and bothered, but no test of $4.58. You would not find me buying it. So could get it out there, but interesting. DBX. Okay, Dropbox. This thing was up at $34.95, down to $30.81. This one looked a lot more like Snap, and that there were a lot of short positions on these, but a lot of the people had gotten off being short this over the period. It was down to like 3 days to cover, which is still enough, but probably not enough to outdo today. What do we have here? It had a lot of shorts yesterday, about 30%. But yeah, it's like 3 days to cover, which is none, but it isn't so many that no matter what that happens, you were going to have people lining up. I'm not a big fan of Dropbox. As I said, someone's going to have to buy them out, and I don't see why there's any premium in this one. So I'm not a big fan of, oh, he's got DBX. DXB maybe, but I thought he'd been writing me DXB. What is this? I bet that he wanted to write DBX. Let's just make sure what this is. DXB. Deutsche Bank Continent Capital Trust. Can't imagine this is one because he's written me a couple of times about DXB, I guess is there. Yeah, he is. In the email, it says DBX. Okay. Is the leaving of their CEO overrated? Probably. But again, no big deal for me. I just don't see a lot in that one. So we'll go on to others. Okay. Of course, Deutsche Bank, not earnings, but just the potential issue with having exposure to Turkey. Could you call this the Turkey trots with Deutsche Bank? Down back into this gap. You had two nice gaps up. You had actually three gaps higher. I wouldn't be shorting a $12 stock. I looked at the options on this, and they were fairly expensive. So I didn't look at this. I did something else in the financial space. But you had this gap down. You had this almost these gaps up to 13, 17. First gap down. This is your second gap down. I would expect one more gap down in Deutsche Bank. We'll be back in a minute. Give me a call.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And what are we looking at here? I got a question about what to look at in Turkey for charts, and that's TUR, which is the Investable Market Index Fund. This thing's been going down since May 30th. So there's nothing new in this other than the fact that this thing just blew up today. Actually up a little bit off the lows, but I don't know if this thing's going to change at all. Another one you can look at is TKC, which is their mobile phone, cell phone business, which gives you a good idea about what's going on. And it is Turkcell, TKC. Again, this thing looked exactly the same, so I don't know if you can read a lot into it. Their market is not that big, and not a lot of people got money in it. The real loss is probably from Deutsche Bank and others that lent a lot of money to Turkey and probably may not be getting it back real soon. So, you know, to me, that's the bigger one. When Monday comes around, it's how Deutsche Bank looks after everybody's figured out how much money they're going to lose on that deal. The big winner of the day is TTD, the trade desk. And this company, you know, it had like 6 days to cover. I think that seems to be about the break. But you've got one big gap. You got the second big gap. I wouldn't be wanting to short this until you see the third big gap higher on this. They may actually be worth it. But, you know, on the third gap, normally when they're that parabolic, you get a fairly decent retrace on it. It's the only reason I'm bringing up that. But I certainly wouldn't short it until I see a third gap. But you've got two here. You get two like this. You're going to get three. Again, if anybody wants my white paper on three gap plays, just go ahead and email me at path@TFNN. I'll be glad to send it to you. But that's what this thing looks like to me to the upside. So could you see 150, 180 bucks on this when it hits the highs? You certainly could, but it's the big winner. But generally, these big winners overshoot, and there's some decent money to make quick when they do decide to pull back lower. Let's see what else we have. Got a question in Intel. Quick look at this. Intel, of course, booted their CEO, who's probably the smartest CEO they ever had, and knew more about manufacturing. That's the big gap. We kind of came in there and filled it a little bit, and we're regapping down. They still can't find a CEO. mostly because the board and everybody knows that the reason they booted this guy was he had somebody that he worked with 10 years ago that he was the boss of, that they went out with for a handful of years. It all seemed to end amicably. No one said anything about it. But apparently the couple of people on the board didn't like what he was doing and decided to bring this thing up and get him booted out for messing with the help, although nobody seemed to care for 10 years, which means that probably didn't matter much. So they brought this up. So no one else really wants to wander into the boardroom here and take a job as a CEO when they think that maybe these guys just have a lot of long knives to stab them in the back. So the question is, you would probably want to be in this around $45 because that's where support is. And if it gets a good CEO, which it will be difficult, there's a reason why they haven't announced anybody. They don't like these weasels in the boardroom who are more interested in making political points than probably doing the best thing for the company, and they know it. And that's why there is no CEO. You think it'd be pretty easy to find a CEO for Intel, but nobody wants to put their head down there on that chopping block and see that yet happen again. You get what you pay for. Intel was doing well. It got up to $57. Is there anything intrinsically poor or bad about Intel? And the answer is no. This is kind of cyclical. We're going to go into a new product that they have where we're going to talk about that in the TI half hour with Tom O'Brien. And my belief is that long term, this company's going to do very well. This is the opportunity, hopefully, to get it back at 45. Again, give me a call at 877-927-6648. We'll be trying to get to everything. I think I got a couple more here. Let me go back and look at these. Zoom back in here. Okay, we're off 25 points on the S&P cash, off 270 on the Dow. Nasdaq's down 65. Russell's off 3.5. So you're getting a little bit of roll here. But again, what I would be looking at in all these are when do the shorts quit shorting these small caps. And when they do, you're probably going to see the short interest fall for maybe 2, 4, maybe even 6 weeks. And then when there's not a lot of shorts there, you're going to find out just how many air pockets are below when it thing gets worked out. Okay, questions about TLT. Well, certainly the TLT looked like it was ready to go back down. This thing seems to be the one that would make a widowmaker out of it. I haven't played it. I thought that this thing really looked weak and was going to go after the 115 lows. And of course, all we needed was someone to say boo, and that was it. And of course, that boo was the US dollar, 96.22 on the UXU8 contract, which is up 0.8% in a day. A lot of times people would have taken that in a month 10 years ago, wouldn't they? Or even longer. I mean, this thing's moving like a tech stock. Anyway, so much for this. A valid breakout. Looks like all the volume in the world. So could it come back down to 95-ish? It could. I don't think it's this is a one-time thing, though. This does open the door to all the way to 100 on the dollar index. I don't know how fast it will take, maybe another year, maybe 6 months, but certainly the door is open without seeing some kind of major reversal on Monday. And I mean, a close below 95. That would make me think that that 100 number is certainly available. Okay, I think I got most of the emails handled. Some of these ones I won't have to. Okay, what else do we have here? Question about Microsoft, MSFT. Take a quick look at this. As I said, I thought this thing needed to get back down to about 105. You kind of came back up here after that bounce on 105. I think you get another shot at this one at 105 again, maybe next Friday. Still one of the stronger stocks. Got to play with the new Surface Pro, or Go, Surface Go mini laptop. Got to play with other stuff last night, too. A little Christmas for me and technology last night. Be back after this short time.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we got the last couple of minutes of this week for the Power Trading Hour. Of course, I'll be in the bottom half of next hour with Tom O'Brien. We'll be talking technology, a lot of stuff going on that's very interesting. So we'll be doing that. As I said, I just don't see a lot of reason for anybody to get in front of this going into a weekend. Somebody making a comment about the VIX. Remember, the VIX is the out of the money puts and calls. So there is no intrinsic value for those puts or calls for a oscillator of the 20, at least, on today it would be 24 days out and 36 days out. So, and you're never within, a week of those expirations. So there's some fairly decent premium in the long term. In the short term, not so much, right? We're talking about options that are expiring in 24 days. So the VIX, while it will move, remember it moves on a very different time frame than what we're looking at today. Also, option premiums tend to be sucked out on Friday for the Saturday and Sunday, and that's a mathematical thing that they do no matter whether the market's going up or down. So you're actually already seeing the premiums sucked out, and that VIX reflecting that for Saturdays and Sundays open. Now you see the market start moving down again Monday or Tuesday, and that VIX could explode. You're not going to have anything, you're not going to have a cushion underneath it. In fact, this is one of the best days to have a pullback if you're a market maker, because the premiums are being sucked out already. So not a bad day to do it. But again, this is kind of just the beginning of this. I suspect 2 more days of pullback. You know, maybe it'll happen Monday, maybe it happens through next Friday. But I think we have 2 more decent days down between now and a week from today. In the meantime, sell when you can, not when you have to. We will see you here Monday. Same bat channel, same bat time.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.